Good morning everybody and welcome to this Smart Charts European session. First of all, congratulations for actually making it through another fantastic trading week. Been speaking to the coaches, mentors and traders inside the Smart Charts, and they say you guys have been absolutely smashing it, which is actually fantastic because we've had some really good moves in the financial markets and it has varied over the past several weeks, and we know that's part of the journey, adapting to what the market is telling us to do. And it's that shift in focus in following your trading plans which really helps you just to navigate the market and the fast-paced times, the slow-paced times, the different market conditions. Because if you're shifting your focus and following a plan, the plan will tell you what you need to do and will help you to adapt to different market conditions. So it's about simplifying your trading process to be consistent for a long period of time. So you guys have been doing a fantastic work, so really great job from every single one of you. Also a big congratulations and a warm welcome to all of our new traders on the Trader Certification Program. Absolutely fantastic to have you on board. You're in for an absolutely phenomenal journey. It's going to be fun, exciting, rewarding, and we're going to be touching base at some point through your workshops, and we're going to be helping you to build all the right trading plans, focus, routines. I'm going to show you some of the true work that I get all my traders to do, that I do every single week, that helps to train ourselves in building the belief and the confidence in what we need to do to trade the financial market successfully, how we get to our long-term trading goals. So we're going to help you to lay all those things out so every single day, every single week, you're just turning up with a very high level of clarity in trading the world's largest financial market. So some really fantastic things coming up for you guys on the Trader Certification Program. So we'll be touching base at some point in the future. I'm looking forward to it. I'm excited for you guys. It's how I started off my journey many moons ago. So I know what you guys are in for, and it's going to be a fantastic time. For now, let's dive into the market and let's see what's going on. Okay, so we've come to the all-important economic data of the week, the US non-farm payroll reports. And this is going to be released at 1:30 p.m. British Summer Time, UK time, and it's data from the Bureau of Labor Statistics in the US showing the change in the number of employed people during the previous month, excluding the farming industry. It's usually released the first Friday after the month ends, and job creation is very important because it's a leading indicator of consumer spending, which affects overall inflation, which is what is used by central banks to determine interest rate policy. And the forecast is for 147,000 jobs to be added to the US economy, which is actually slightly higher than the prior month's report. Now, we know this week, literally from Monday morning, we said, listen, this week's all going to be about the US dollar because there are many different types of job news announcements coming out over the course of the week. And we already went through how the central bank members of the Federal Reserve on Monday morning, in a few different speeches they gave, actually said that, listen, we're going to be looking at the jobs data to determine our next moves on interest rates. So we know it's going to be a very high impact news announcement. Volatility can be very high. We have been looking to trade the US dollar to the long side because last week we had some big trend reversal setups on the vol reversal. So the US dollar has been trending lower for several months, but last week we started to look for trend reversals and started to get long on the US dollar. Why? Well, first of all, our plan told us to do that, and the strategies inside of Smart Charts gave us the early warnings and clues that a trend reversal could develop. And we also know that because of this economic data, we're probably going to see a lot of profit taking in the US dollar as well. So we had a lot of combination of factors. Seasonally, tends to be a bullish month for the US dollar as well, and that's why we've been focused on trading the dollar in that direction. Now, this data is obviously going to be very important because it could set the trend for literally the rest of the month, all right? Because we're really early on in the month, aren't we? And sometimes traders like to digest the news reports and they start to build their positions, and you get flows developing as the month unfolds. There's a long way to go to the end of the month, so patience is always going to pay off. We don't try to predict what's going to happen on news announcement. We don't try to guess how the market will respond. Why do we look at economic news announcements? There's three different reasons. First reason, risk management. When you're trading a theme, like we have been trading, everyone's been piling into the US dollar. There's been other themes going on as well, the strength in commodity currencies, the drop in the euro from the weak economic data. There's other themes going on as well that we have been trading, we've been highlighting, of course, in these webinars. when you're trading those kind of themes, and what can happen is that you can find the majority of your trades are around the same sort of currency, which is fine because that's where everyone's driving the market. So that's where the high priority trading opportunities will be. But then you don't want to be too heavy. You don't want to have too many dollar positions open coming into these high impact news announcements. So first of all, we've got to protect the portfolio, and we've got to manage the risk effectively. The second reason we look at economic data is for any surprises, because everything's already priced into the market. It's quite interesting that this week we had positive US jobs data already. And that's already led to strengthen the US dollar, because if the US economy is strong, the Federal Reserve won't need to cut interest rates as aggressively, right, as everyone is thinking. They're still going to cut them, but they don't have to cut them as big. So interestingly, the market already gave us those clues last week from the trend reversal trades on the vol reversal strategy on euro dollar, Aussie dollar, Kiwi US dollar. So everything is already priced in. But it's when the market gets surprised. When the market gets surprised that, oh, actually no one was expecting this is a completely different situation, this is where we can get some really big moves in the market as everyone's readjusting their portfolios. And sometimes the volatility is very high, very choppy, and we can't trade it, or don't want to trade it at least. But sometimes we can get some really, really good clues, really good trends developing, and those are really high probability trends because they're fundamentally led. There's a fundamental narrative on why everyone's driving the market higher or lower. So we look for any surprises, any potential trading opportunities that develop after that surprise, and the readjustment for different portfolios developing. And the third reason is that if we can get a fundamental narrative lining up with a technical narrative, then this can lead to more longer term trading opportunities, more higher reward to risk trades, right? And actually the fourth reason, so I'm going to add another one in, is that actually when you start to grow your account size, for those of you trading larger capital sizes, then you tend to need more confidence in, why am I taking a trade here? You know, why am I buying this? Why am I selling this? So, you know, the economic narrative can give you a bit more confidence in what you're seeing in front of you on the charts, and trusting your technical tools as well. So multiple reasons why we look for these things. So let's see how the jobs data comes out, and let's see how the market is going to respond to it. And I'll do my best to highlight any opportunities over the course of the month through these different webinars. But then make sure you're tuning into all the live daily trading webinars every single day to also interact with the traders and identify and participate in different trading opportunities as well. For now, let's dive into smart charts and let's see what's been going on. Okay, so if we look at the tools tab here, so overnight we can still see that strength in the US dollar that we had been trading. It's still there overnight in the Asia session. We've had that for multiple days running. And because we had the reversals on the medium to higher time frames last week from the vol reversal strategies, let me just show you actually. So again, for you guys in the trader certification program, it's going to be absolutely fantastic when you start looking at the vol reversal strategy, because if we look at euro US dollar on the 4-hour chart, we had this really nice trading range, and then we had this setup here, this down arrow with this 4, 3, 2, 1 bounces that we look for this beautiful trend reversal. And this is euro dollar, so when euro dollar goes down, that's euro weakness and US dollar strength, something we've already been highlighting could be the potential case this week with all the different economic things going on. So we had the similar things there on Aussie US dollar, Kiwi US dollar on the 1-hour chart. Actually Kiwi US was actually a really good one, because if you look at the daily chart, we came into this significant high point. Look at this high point. What happened last time we got to this point? The market went down. So then we were looking for the same thing to develop here, okay? And if you go down to, let's say, your 1-hour chart, we had a really nice setup here on the vol reversal strategy to get involved in this triple top formation for this sell-off, all right? So we had the sort of medium to higher time frame trades on the dollar last week, and we said this week, if you're still trading US dollar, if it's still strong, which it has been in the tools tab, telling us the strength is still there, this is when you need to go down to maybe your faster time frame strategies like the pip runner, all right? So in this instance, your pip runner, one of your fast time frame strategies. So we've had some good clues here. So we've had pockets. So this is US dollar against the Swiss franc on the pip runner. So as this exchange rate goes higher, the US dollar is strengthening while the Swiss franc is weakening, all right? And what do we have? We had some really good bounces here, look, in the moving average zone, in the moving average zone, in the moving average zone. But what's happening now is that, look, we have some leading evidence that there's no more buys left in this moving average zone. So this can happen because we're getting into the higher impact news announcements. So what can happen is that maybe some traders don't really want to keep on building positions anymore. You know, some are just going to maybe take some profits off the table. If you've made some decent money over the past several days trading the US dollar, you're probably going to take some profits off the table, exit your trades coming into this high impact news announcement where who knows what's going to happen. So already the market is giving us those clues on how the rest of the world is positioning themselves, okay? So obviously we need to pay attention to that. So for you fast time frame traders, probably resume trading the US dollar if the trend continues after that high impact news announcement, okay? If it does continue to go in that direction. So just something to be mindful of, okay? Risk management, always a #1 priority, and then growth will just take care of itself if you're focused on managing risk effectively. Now, in terms of other trading opportunities, I mean, there's plenty of trading opportunities to consider. Something that has been highlighted on London and Sydney trading floors is actually your daily chart phase changer on Euro New Zealand dollar. Okay, phase changer, one of my favorite strategies. We'll be going through that in the trader certification program. I'm going to show you how I trade that and how we build the belief and confidence in actually following what the market tells us to do. So I'm going to go through all that stuff with you guys. It's going to be fantastic. But we've had a lot of success in Euro New Zealand dollar. We've had some really good trends with the euro weakness and the commodity currency strength. We're not too sure what a commodity currency is. Basically, your commodity currencies are countries that make a lot of their income from the export of commodities, all right? So Australian dollar, New Zealand dollar, Canadian dollar, okay? Norwegian kroner, these are regarded as commodity currencies. So we had a lot of strength in the commodity currency. So here we have Euro Kiwi. We had this nice lower low, lower high cycle developing off this moving average zone where sellers have actually turned up before. And we've had some good trades here on the way down. And now we're back into this moving average zone where sellers could potentially turn up here again. And what we like is the fact, on top of what Smart Charts is finding, we can also see visible clues on the chart that we're in areas where sellers have turned up here before. So we know there's a high probability chance they could turn up here again. We also have an angular price here where sellers have turned up here before. So we know there's a high probability chance that maybe they could decide to turn up here again. And what we're looking for is this repeated pattern of behavior that we were trading all the way over here. Because again, what do we have? We had these cycle formations, what we call a staircase trend, okay, developing off the moving average zone. What is this telling us? That sellers are selling this market at a high price in the moving average zone, and they're willing to keep on selling beyond low prices, all right? So your day one of that trader certification workshop, we're going to go through why we get these flows developing, how it works at the institutional level, how the institutional players create these kind of structures and repeated patterns of behavior, and leave behind these clues for us to pick up on and participate in the market. And of course, at some point, the trend is going to end. That's fine, okay? So in this instance, we've had this same kind of situation develop here. So we're looking to see if the trend can continue. And on top of what Smart Charts is finding, on top of the visible clues that we can see, and that we're in the moving average zone where sellers have turned up before, and this also looks like this period here as well. So maybe we're trading the same kind of period again. We also like in this situation the fact that if we just zoomed out the chart, what you'll actually notice is we have a major level of horizontal support here. So a horizontal support level is basically a price level where we can see historically in the past that sellers have struggled to break through and buyers have actually turned up. And what can happen is the market can tend to gravitate towards these kind of areas, all right? So in this instance, just like we had a trend that had developed all the way down to here, the trend all the way developed all the way down to here, maybe this trend will still keep on developing all the way down to here as well, as it has done in the past, right? So sometimes that's quite nice, okay? And this is what's great about the foreign exchange market, because it's quite volatile. There are periods of uptrends and downtrends, uptrends and downtrends. You can also give yourself some visible targets and say, oh well, look, sellers could stay in control of this market all the way up until this horizontal support line. So it helps you with the trade management part of trading as well, because we can visibly see it, right? The market gives us the clues we're looking for. So on top of helping you to identify the potential trading opportunities, smart charts will also do the most important work, which is going to be risk management. Because by clicking the sell icon here, it'll populate an entry price of the blue dot, stop loss of the red dot, target the green dot. These can all be adjusted according to your own user preferences. It will also do the risk management work for you. Important to keep that risk low. Make sure you're able to deal with the random distributions of wins and losses that develop throughout the day, throughout the week, throughout the month. And we like to set an expiry on this particular strategy, on this time frame, a current bar close expiry, and simply decline or accept the traded bottom. And what that means is that if sellers don't turn up, okay, with all this volatility that's going to happen later on, if they don't turn up and continue this trend lower by the end of the day, then that's fine. Your pending trade would expire. You didn't win, you didn't lose, it didn't cost you anything, all right? So in this instance, all we can do is be prepared that if the trend does continue, if sellers do continue to turn up, or if buyers do continue to turn up in an uptrend, that we're ready and waiting to participate in it, right? Whether they decide to turn up or not is a completely different situation. Our job is to be prepared to capitalize on the opportunities the market presents to us. Okay, so there's plenty of other opportunities developing across all asset classes, across all different time frames. So make sure you're tuning into the live training webinars happening all throughout the course of the day as well, and interact with the traders live. Make sure you're able to identify and participate in those as well. In the meantime, I'm going to wish you all the best you're trading today. Have a fantastic weekend, and we're going to touch base again next week for another fantastic week in trading the financial markets together. All the best. I'll see you next time.